I don't know if this, sort of goes down from the rich to maybe not so rich to all of a sudden, if you're feeling a pinch at a Louis Vuitton store or whatever, you're going to feel a pinch if you're looking for a home. Who better to ask than Glenn Kelman? I love having Glenn on, the Redfin CEO. Glenn, what is going on in real estate right now? If the rich, who seemed impervious to what was going on, certainly in the economy, are beginning to dial things back, what about when it comes to looking for homes?
Well, there's a rally right now in housing. It's just been over the past week that demand has been up 25% year over year. It's the highest level we've seen in a couple of years. Maybe some people were waiting for the election. Many may be excited about a new president. But for whatever reason, home buyers have come out in force, and it seems to have defied the laws of gravity just because interest rates have also risen. So to see home buyers in such numbers at the same time that rates are rising, I don't think I can remember a time I've seen that before, but that's what's happening.
What do you make? You mentioned the election, and that it was one of the uncertainties going into this. I mean, now we know certainly who won. We know what the trajectory is from here. So does that get people who are looking for homes sort of off the couch and in the shopping mode, or what?
It does. There have been two factors, and one has been the election. The other was the September 18th rate cut from the Federal Reserve Bank. That is less of an actual factor because the market's already priced it in, but psychologically for consumers, it was a big deal. And it was a much bigger deal that the election was over. Donald Trump won. I think there is rising confidence in the economy. I'm not making any kind of partisan endorsement here. I'm simply stating the fact that home buyers who had been on the sidelines have now come off the sidelines and said they want to make a deal before the end of the year. And this is usually when we're shutting down and planning for next year. But demand has been really strong. Some sellers who had had stale listings were thinking that they weren't going to get it done this year, and now they're getting bids. And so it might not last. It might only be a week or two. As I said, I think rates do exert a force on the market that sooner or later will take its toll. But it's been a very strong reaction, much stronger than any of us predicted.
So you're in a much better mood than you were the last time I talked. Last time I talked to you, I was really worried. I was worried.
Always in a good mood. What are you talking about?
I was worried for you because you just sounded so unusually down and, like, oh my gosh, what's going to happen? So things are better now. Things are looking better.
Yeah, I mean, I try to tell it to you straight, Neil.
Yes, you
so when
do,
the market's down, I'm going to tell you it's down.
Yep.
But I still love my kids. The sun still comes up every day, either way. So Redfin will be fine. We're going to keep taking share no matter what. But it's a little easier when the market is behind you instead of holding you back.
It depends on the day with me and my kids, but I'll accept that, Glenn, what you're saying. One thing I thought, knowing I was going to talk to you today, is Jerome Powell maybe kind of raining on the party a little bit to say, rate cuts aren't sort of etched in stone here. They could be dragged out a little bit. I'm paraphrasing. Did that worry you, or was that welcome news to you?
Well, I think he's an amazing chair. So first of all, I've been a critic. I thought rates were too low for too long.
Right.
During the pandemic, it was obvious that the economy had recovered, and that contributed to inflation. But mostly he's done a magnificent job, and he's certainly helped us get to a soft landing. And so his commentary has been nothing but constructive. I don't think that he can just lower rates willy-nilly. There's 2 rate cuts priced into the market for next year. And that's about as far as I would expect the Fed to go, because there is a fairly aggressive ambition to grow the economy, to cut taxes, and that just puts pressure on inflation and it puts pressure on rates. And so that's always the dance between the government and the Fed.
You mentioned Jerome Powell real quickly. He was asked if Donald Trump would want to relieve him of his duties, fire him. He wouldn't go, and that he doesn't have to go. How do you think those two are going to be getting along?
Well, I hope it doesn't matter. And what I mean by that is that the president is the president of the United States. He's my president. He's your president. He's our president. But there are institutions in American life that are beyond the reach of any one political leader. And so I want the Fed to be independent, to do its job. I don't want it to be craven toward Biden, toward Trump, or toward anyone else. I want these professional economists to look at the economy and help us take our medicine, because it's so painful for a political body to do that. It's hard to raise taxes. It's hard to cut spending. But the Fed has the independence, at least, to maintain a hard line on rates. And I am speaking as one of the primary victims of high rates. Every real estate broker would love to see low rates, but we have to think like Americans and do what's best for the whole dang country.
You're absolutely right. Glenn, thank you very much. Very good seeing you again. Be well, and my best to your kids and fun family. Glenn Kelman, the Redfin CEO, calls them like he sees. You don't see too many people who, try to get a balanced look on the right and the left, conservative, liberal, all of that.